Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX, with your European session morning outlook. We'll start with the North American markets. We had the GDP price index for the fourth quarter come out as expected at 0.9%, and the annualized GDP 0.4% better than expected at 1.4%. Also, the personal consumption expenditure prices for the quarter 0.1% worse than expected at 0.3%, and the core data is as expected at 1.3% again for the quarter. The Dixie is up to 96.33 from 96.13. Looking ahead, February's US PCE data is in focus today. The Fed's favored inflation gauge is expected to show the pace of price growth accelerated to 1.8% year on year, the highest since October 2012. A firm outcome may boost FOMC rate hike expectations, offering a lift to the US dollar. The prospect of a more aggressive tightening cycle may undermine risk appetite, putting particularly strong selling pressure on the sentiment-linked Australian and New Zealand dollars. Today's events, as I mentioned, the core personal consumption expenditure price index year on year, the same month on month, and we also have personal income month on month and personal spending month on month, pending home sales year on year. And for this week, the most important day for the US markets will be on Friday. We have the non-farm payrolls, ISM Manufacturing PMI, and ISM Prices Paid. So it'll be a very important week. Tomorrow is consumer confidence. All right, in the European markets, it's Easter Monday. We have European private loans tomorrow, industrial and consumer confidence, business climate, services sentiment, and the economic sentiment indicators are due on Wednesday, along with inflation reports from Germany. Thursday is the retail and unemployment reports from Germany, along with CPI from the European Union, Italy, and the ECB monetary policy meeting accounts. Friday, we'll have the Swiss retail sales year on year. The Markit Institute will print out manufacturing PMI reports for Italy, France, Germany, and the EU. The last report will show the unemployment rate for EU for February. Alright, onto the UK markets. We had no events on Friday. The FTSE 100 closed on a dodgy Friday at 61.22. The 10-year gilt yields closed at 1.45% on Friday. As usual, Thursday will be the main day for data from the UK markets. On this day, we'll be expecting the GfK consumer confidence, the gross domestic product year on year and quarter on quarter, the consumer credit for February, the mortgage approvals for February as well. That will all be on Thursday. All right, onto the Asian and Pacific markets. Japanese stocks rose in thin trading, with the benchmark index capping a weekly advance as insurers and car makers led gains while the yen weakened against the dollar for a sixth day. The events for the late European night today are Japanese jobs applications ratio, Japanese unemployment rate, overall household spending in Japan, and large retailer sales as well are in Japan. The last event will be the retail trade year on year. And for the week in the Asian region, for Tuesday we have Japanese industrial production year on year and Japanese industrial production month on month. On Wednesday we have Japanese foreign investment, the foreign investment in Japanese stocks, and Japanese foreign bond investments. Thursday and Friday are both days for manufacturing data. A whole slate of manufacturing data will be coming out on those days. In the Pacific, there's no major events throughout this week for the Aussie and the Kiwi dollar. Therefore, we would warn our traders to closely watch the events from Japan along with those in China. Alright, the last sector for the day, commodities. Gold prices fell to a 4-week low on Thursday as hawkish comments from a handful of Fed Reserve officials sparked speculation that the US Central Bank could give serious consideration to a rate hike at its April meeting. Crude oil posted early gains in Asia, with investors' interest on a key meeting on a proposal to freeze output by major producers looming next month, and stockpile data from the US this week. In the week ahead, oil traders will be focusing on US stockpile data on Tuesday and Wednesday for fresh supply and demand signals. Oil futures settled lower on Thursday as a massive build in US crude inventories helped prices tally their first weekly loss in 6 weeks. The crude oil market remained closed Friday in observance of the Good Friday holiday. Gold had a range of $6 today, down to $12.13. Silver has a range of 8 cents at $15.20. Crude oil has a 20-cent range at $39.79 now, and natural gas is trading at $1.76 at the moment with a range of 1 cent. Alright, thank you everybody for the attention. That was all for today. I will see you next time. Goodbye.